Before I present our poll of top brokerages on how the banking sector will do next year, a word on the year that's just ending. The sector actually did very well in terms of earnings. Motilal Oswal Securities, writing after the Q2 results, notes that on a 2-year CAGR basis, PSU banks have reported profit growth of 98%, while ironically private banks reported a profit growth of 25%. In fact, PSU banks were among the best performers in Q2, second only to metals. However, foreign investors have not been so impressed. Sectoral analysis of foreign fund inflows in the past 12 months by CLSA shows that foreign funds reduced their exposure to financials by a net $2.5 billion. In percentage terms, the weightage of financials in FII portfolios fell from 20.1% in November 2020 to 18.9% in November 2021. In terms of stock price performance, SBI is the only one that ranks among the top 10 gainers on the Nifty. Nifty Bank itself rose just by a paltry 13% compared to the Sensex and the Nifty, which have gained by a handsome 20 to 22% in the current year. PSU Bank Index, however, did much better. It gained 45%, but even then, it's only the 6th best sector, coming after metals, power, realty, IT and cap goods. Okay, for now we go to the year ahead. Our poll of top banking analysts showed that one bank is everyone's favorite. Guess, ICICI. All analysts we polled had this bank as one of their top 4 banking buys. SBI was the next in list. 60% of the respondents said yes for SBI. Axis, HDFC Bank, HDFC Limited and SBI Cards figured as top buys in 40% of the analysts polled, while SBI Life and AU Finance made it to the top 4 for 20% of the people polled. The big takeaway therefore is ICICI may be everyone's favorite, but the SBI group, as you can see, is emerging as a big draw, rivaling the HDFC twins. Let's come to the banking profit and loss accounts, the P&L. After 2 dreary years of abysmal growth, will loan growth touch double digits in 2022? We asked our respondents. 80% said yes. 20% said no. They thought only high single digits will be the bank loan growth. On bank margins, a majority of 60% said margins will rise because of the rising interest rate scenario, but it will rise only by about 10 to 20 basis points. 40% of those polled said margins will be flat. Earnings growth, now ultimately that's what we want, that will continue to be good because credit costs or money set aside for providing for bad loans is set to fall further. 40% of the respondents see banking earnings up in the teens, that is 10 to 20%. 40% of respondents said it will do even better at 20 to 30% growth, and a small 20% said they expect their banking earnings to grow by 30%. But this is not for the entire universe of banks. It is just for the banks covered by those brokerages whom we polled. Okay, so will FIIs continue to shun the sector? Brokerages said an emphatic no. 80% of them expect FIIs to increase their overweight on banks. Only 20% see a decrease in the overweight, but overweight it is. Will the third wave or Omicron lead to an increase in slippages or NPAs? All respondents said no. Bank asset quality will improve in 2022. That was unanimous. And finally, any dark clouds over this improving asset quality earnings picture? What's the biggest downside risk? Everyone said failure of loan growth to kick off is the biggest danger. This may happen with or without Omicron. Simply if growth doesn't pick up, that's the biggest danger. However, a small percentage of respondents said that post-Omicron, fintechs may rise as an enduring challenge. But for the moment, the 2022 outlook is quite positive. Higher loan growth, higher margins and much better earnings outlook as well.